course, the banking big boy, HDFC Bank, declared its Q3 FY23 numbers, and we saw net interest income jump to nearly 23,000 crore, a solid 25% jump when I'm looking at it year on year, 10% nearly up sequentially. We're looking at profit after tax of 12,259 crore, which is up roughly 18.5% on a year on year basis. And operating profit slightly muted in comparison to that net interest income number, and that's largely on the back of higher OPEX. OPEX went up nearly 35% on a year-on-year basis. Solid rise in OPEX is what we've seen, and that has of course led to operating profit coming in muted, up 13.5% year-on-year, but largely in line with what we were penciling in. Provisions have come in at nearly a 10-quarter low. At 2,800 crore, the provisions have come in solidly lower, and it's down around 6.5% on a year-on-year basis, 13+% sequentially. That's where the net the provisions number is at, and that's what's really boosted PAT. Gross NPA is largely flat, so NPA numbers largely flat. ROA is at 2.24%, solid growth there, and we're seeing a strong growth on both sides of the balance sheet as well. 20%. The machine continues to churn, but that's where we are at HDFC Bank, largely in line set of numbers to what we were expecting.
In line set of numbers with what we were expecting, that's the word coming in there. But let's look at what the brokerage is also saying this morning. Now, Bernstein has maintained their outperform rating given a target price of 2,200 rupees per share. Investec too is maintaining their hold given a target price of 1,690 rupees per share, while Motilal Oswal is also maintaining their buy rating given a target price of 1,930 rupees per share. Jefferies too maintaining their rating coming in with that as well. Let's look at more in detail. Now, Bernstein says that overall, in Q3, what the results HDFC Bank has actually reported with an EPS around 21.89 rupees. Profitability on the return on asset basis improved by 20 basis points, and continued growth in the deposits is a factor that they're keeping an eye out on, as well as overall, the asset quality trends also remained quite benign. So that is a factor that's coming into play. That's why they are maintaining their outperform rating. Investec too said that one-offs redeemed the headline numbers for the company, while balance sheet management is not sustainable, is the word coming in from Investec. Motilal Oswal, two similar in-line set of numbers is what they're saying coming in on their view as well. So that is why they're maintaining their buy rating as well. So all in all, brokerages seem to have maintained their rating this time around. It was a stable quarter that came in from HDFC Bank.